as you may know, due to the COVID-19 pandemic, the Australian Taxation Office introduced special tax deductions for those working from home during the 2020 to 2021 financial year. However, with many people now returning to the office, the ATO has announced some changes to these tax deductions for 2023. And in this video, I'm going to be covering everything that you need to know about these upcoming changes, who will be affected, and how you can go about maximizing what is still available for those still working at home, whether it be on a part-time or a full-time basis. So if you are an Australian taxpayer who has been working from home, stay tuned because this video is most likely going to be applicable to you. Okay, first up, shortcut method is no longer a thing. The shortcut method for calculating work from home tax deductions was a simplified option introduced by the ATO in response to COVID-19 as a whole. This method allowed taxpayers to claim a flat rate of 80 cents per hour worked for those working from home or generally remotely to cover additional expenses that generally got imposed on people because they were now having to use their own utilities to pay for their work environment, such as phone bills, internet bills, and electricity, just to name a few. Where that is no longer in effect, and now there are only two viable methods for claiming work from home tax deductions. They are the actual cost method and the fixed rate method. And it's important to note that only the fixed rate method is subject to these new changes. The revised fixed rate method applied on the 1st of July, and I'm going to say the year very clearly, 2022, which means those who have work from home tax deductions can use this method for their 2022 to 2023 income tax return. And it's actually kind of a positive. The original fixed rate method sat at 52 cents per hour worked, which is what you could claim, whereas now it's sitting at 67 cents per hour worked, which is an increase, so I'm not really complaining. Now, while this revised rate of 67 cents being an increase is relatively generous, and it was designed to cover expenses such as your power bill, your phone bill, internet usage, any computer consumables, just to name a few examples when related to work-related expenses, it might not actually be sufficient due to high inflation. So it might not actually cover the cost to run these services while you're working from home, but it's definitely well worth taking advantage of if you have hours to claim because you've been working from home. It's also worth mentioning as well that the fixed rate method specifies exactly what it's intending to cover on the ATO website. I'll leave a link down in the description below so you can go see what's covered within. The thing to note is that you can't claim other stuff as well if you use that method when doing your income tax return. Certain items such as technology as well as office furniture, which are very common things that people buy to deck out their offices for work-related purposes, might actually give them a higher deduction outside of using the fixed rate method, which I'll touch on in just a moment. These types of assets are not actually factored into that 67 cent cost as part of the fixed rate method, and most likely would be better claimed through the actual cost method, being the other viable option to do this when doing your tax. Additionally, expenses incurred from maintaining and repairing these items, as well as expenses incurred from cleaning your office space, are not included either. So again, depending on how frequently this has occurred over the course of a year, it may be worth looking into doing the actual cost method versus the fixed rate method. And I'm doing a bit of exposition surrounding it because it's really important to figure out which one's more suitable to you. One other little nifty benefit is that prior to these changes being implemented, the fixed rate method required you to have a fixed work from home location or a dedicated space at your home for the hours that you're planning to claim. Whereas now that's been abolished. You can theoretically work from anywhere. As long as you're working remotely, you can claim those hours. Now I'm going to mention this a few times before I make it to the end of the video, and it's an important one to understand, and it's an important one to adhere to as well. You need to keep records irrespective of which method you use, even for the fixed rate method. If you are claiming that 67 cents on the dollar, you're going to have to keep records of your power bill, your phone bill, your internet bill, whatever costs are being factored into it. Make sure you have a copy because the ATO requires you by law to keep records for up to, I think, 7 years off the top of my head. Don't quote me on that. Pretty sure it's 7 years. And they can call upon that at any time if you were to be audited. And these records can be kept in many different formats depending on the type of expense that's being incurred. So just common ones would be receipts and invoices, and potentially even a diary, depending again on those specific costs. Additionally as well, you need to demonstrate how these records tie into the expense specifically. What I like to do is I like to give all of my receipts and invoices labels. So I'd write something like office furniture, or internet bill on the top of it, just as a quick one-liner so I can group them together in the instance where I need to provide that information to someone quickly and not have to sift through it. It just takes 5 seconds to write a label on it every time I get one, and then I file it away respectively where it needs to go. Now, one additional change to the fixed rate method is that you used to be able to extrapolate your hours worked throughout the year by having an average of what you worked in a week and then expanding that to a 4 work week average. And you could keep that in a diary and then quote that number at the end of the year. What the change that's now come into effect is that you need to keep track of your hours accurately. You can do this through your timesheets, a diary, or a roster, just to name one example. And I do this through all of those because I have to submit my timesheet. So if I had to download all 52 of them in a year, I could do that. I keep it in my finance tracking spreadsheet, link in the description below if you want to gain access to a free template and how to use it. I've provided that resource and talked about it plenty on the channel. I keep track of it in my tax sheet on that spreadsheet. It's pretty straightforward. I go to my accountant, quote the number of hours I've worked, and it's very easy to update and it's very simple to use. These tools help me keep an accurate record, and if I ever were to be asked to prove it, I can. Anyway, to kind of wrap up the record keeping aspect of today's video in relation to the changes that have come into play, not much has really changed in what you need to keep as part of that record keeping information. Generally speaking, the title of whatever it is that you have purchased or paid an expense on, what that portion was used for work versus personal use, how much it cost you in the end, and when the date of that transaction or that purchase occurred. Pretty straightforward information. You're painting a picture and you can provide it to the ATO if they require it. There's not much more to it. My incentive to you is to make sure that you keep that information as accurately captured as possible. It's also worth mentioning as well, because I see a lot of people get confused with this one, that if they make a purchase that exceeds $300, so it's more than $300, they can't claim the full amount in one financial year. Generally, those types of items and pieces of equipment need to be depreciated. That's what it's called. Depreciation is a really good topic to understand. I don't know if I've actually made a video on it on the channel, but just understand that if it's worth more than $300 or it costs you more than $300, you're going to make a claim on that, probably using the actual cost method over a number of years to get that full deduction on whatever it is you purchased. As a one-liner, depreciation is just claiming the deduction in value of that asset. So in summary for today's video, there are 2 key takeaways which are definitely worth mentioning and reiterating one more time. The first being that there have been alterations to the work from home tax deduction schemes that are currently available and being made available by the ATO. Number 2 is that the record keeping side of things has altered a little bit as well, and you should definitely understand what they are to make sure that you're compliant if you're planning to make deductions or claim deductions as part of your working from home expenses. That is pretty much all I have for you today. So if you did learn something, if I gave you some knowledge that you might have been like, that might actually be useful this year, please consider hitting that like and subscribe button down below. I definitely appreciate the help, and it definitely goes a long way for the channel. So thank you if you did take the time out of your day to quickly do that. And with that being said, I'm going to leave you there. So have a good day, have a good week. And as always, I will see you in the next one. Bye for now.